Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit Equities. In this video, we'll be talking about 4 stock ideas from Kotak Securities which we can consider ahead of the election outcome. Now friends, if you have not already become members on Profit Equities, please click on the blue join button and follow the steps. This will entitle you to member only privileges on Profit Equities. Also friends, if you like the content that we produce on our channel, please don't forget to like these videos, share these videos, and if you have not already subscribed to our channel, please click on the red subscribe button to do so. This will help you get notified whenever we upload a new video. Please watch this video to know more. Now the first stock on the list is KEC International Limited, which is available at Rs 286.25 and the face value for it is 2. The symbol for it is KEC. Now KEC International Limited is engaged in the construction of utility projects. Its geographical segments include India and outside India. Its power transmission and distribution businesses includes providing end-to-end solutions in power, transmission and distribution. Now given a strong backlog of Rs 184 billion in 9 months of FY19, KEC can reach the upper end of 12 to 15% revenue growth guidance for FY19. Revenues are expected to grow from Rs 100 billion in FY18 to Rs 139 billion in FY20. Leverage will reduce, led by payments received from Saudi Arabia, customer advances and a greater share of low-cost forex debt. The management expects to reduce interest cost to 2.1% of sales for Q4 of FY19, 2.7% for FY19 and 2.5% for FY20. Now looking at the 1-year chart, this company has been really a nothing stock and not much wealth has been created here. Now the company is a mid-cap with a market capitalization of 7,359.15 crores. The EPS of 19.28 translates into a price to earnings ratio of 14.85, which is largely in line with the industry price to earnings ratio of 13.42. The company's book value of 94.72 translates into a price to book ratio of 3.02, which is not widely expensive. The debt to equity stands at 0.7622, whereas the return on equity for this stock is a strong number and stands at 0.2195. The company has a dividend yield of 0 as it does not pay out any dividends, whereas the promoter holding for this stock is just about average and stands at 51.35%. The good thing is that none of it is pledged. The company has a total debt of 3,453.6 crores, whereas its 52-week high and low stands at 421 and 233.30 respectively. Now the second stock on the list is Larsen & Toubro Infotech Limited, which is available at Rs 1697.45 and the face value for it is 1. The symbol for it is LTI. Now Larsen & Toubro Infotech Limited is an India-based company which is engaged in computer programming, consultancy and related activities. The company's business segments include industrial clusters and services clusters. Now Larsen & Toubro Infotech's growth momentum will likely sustain due to an excellent sales process reflecting an improved client metrics, a strong pipeline of large deals and strength of delivery. The sales transformation that started 2 years ago has been refined further with multiple new strategies for new customer acquisition and large deal conversion. Now Larsen & Toubro Infotech has strong capabilities in multiple areas of digital across verticals. The success of digital initiatives such as analytics and digital in every account contributes to strong digital revenues, which in turn contributes to the overall health of the company. Now, as is evident from the 1-year chart, this company has not really done much and has been choppy throughout the entire year. The company has a market capitalization of 29,453.44 crores, which means that this company is a large cap one. The EPS of 87.36 translates into a price to earnings ratio of 19.43, which is slightly cheaper when compared with the industry PE of 23.62. The company's book value of 309.87 translates into an expensive price to book ratio of 5.48. The company's debt to equity is decent at 0.1566, whereas the return on equity for this stock is an awesome number and stands at 0.3463. The company has a dividend yield of 1.65%, whereas the promoter holding for this stock stands at a very good number of 74.80%. Also, none of the promoters holding is pledged. Total debt on the books of the company is 766.6 crores, whereas its 52-week high and low stands at 1,987 and 1,436.70 respectively. Now the third stock on the list is Surya Roshni Limited, which is available at Rs 235.05 and the face value for it is 10. The symbol for it is SURYA ROSNI. Now, Surya Roshni Limited is a manufacturing company with business interests in steel tubes and pipes, lighting, fans and appliances, and polyvinyl chloride pipes. The company offers pipes and tubes, CR strips, and lighting products. It operates in two segments, which are steel and light. Now, as is evident from the 1-year chart, this company has been an underperformer and has not really created any wealth for its shareholders. The company is a small cap with a market capitalization of 1,278.88 crores. In FY18, 72% of revenue came from steel pipes and 28% from the lighting business led by LED. In the steel pipe segment, company derives 70% of its sales through B2C format, which is through hardware stores. Company's distribution network includes 250 dealers and 21,000 retailers. Karvi projects 18.7% CAGR between FY18 to 20 in consolidated profits from Rs 1.08 billion in FY18 to Rs 1.5 billion in FY20. They expect the stock to re-rate as and when lighting and steel pipe businesses get demerged. Now, the EPS of 20.91 for this stock translates into a price to earnings ratio of 11.24, which is much cheaper when compared with the industry PE of 16.36. The price to book ratio of 1.64 is also not wildly expensive. The company has a dividend yield of 0.85%, whereas the promoter holding for this stock is a strong number and stands at 62.90%. One concerning factor, however, is that 23.67% of the promoter's holding is pledged. Now, this company has a very high debt of 1,267.2 crores. 52-week high and low for the stock stands at 422.60 and 185 respectively. Now, the final stock on the list is JK Paper Limited, which is available at Rs 135.85 and the face value for it is 10. The symbol for it is JKPAPER. Now, JK Paper Limited is a paper manufacturing company and its products and services include paper and paperboard. The company offers products under various categories including coated paper and board, uncoated paper and board, packaging board, and office documentation. Now, as is evident from the 1-year chart, this company has had no conceivable pattern throughout the entire year and is closing the year at almost the same level that it started it. Now, this company is a leading player in India's copier paper market with a market share of 23% and second largest in the coated paper segment with a market share of 12%. Captive procurement of raw material, which stands at 52%, lower logistics cost, and increase in average realization in a rising global cost curve scenario are expected to support margins. The acquisition of Sirpur unit and brownfield expansion plan of 2,000 kilotons in Gujarat is expected to strengthen the company's position in terms of product offerings and help gain market share. The imposition of anti-dumping duty on certain kinds of uncoated paper is also expected to benefit the company. Now, the market cap of the company is 2,421.44 crores, which means that this company is a small cap one. The EPS of 24.53 translates into a price to earnings ratio of 5.54, which is dirt cheap when compared with the industry PE of 8.37. The book value of 116.46 also translates into a reasonable price to book ratio of 1.17. The company has a debt to equity of 1.1471, which is not a very good number, and the return on equity for this stock is 0.0674. Now, the company has a decent dividend yield of 1.84%, whereas the promoter holding is just below average and stands at 48.42%. The company has a total debt of 976.2 crores, whereas its 52-week high and low stands at 194.20 and 97.30 respectively. Now, friends, please don't consider these to be recommendations on our part. Please go ahead and do your own research. We'll be providing a link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Also, friends, if you like the content that we produce on our channel, please don't forget to like these videos, share these videos, and if you have not already subscribed to our channel, please click on the red subscribe button below. This will help you get notified whenever we upload a new video. Thanks for watching and you have a great weekend ahead.